The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the August 8th magnificent Monday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go look at the circumstance of the bulls and the bears. What the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone. Dial on in 877-927-6648. Of course, internationally, you can reach us at 727-445-1044. No matter where you're at, we would love to hear from you. So let's go ahead and get this show started on Magical Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we have the Dow trading off 28 points at 18,516. S&P off 3 points at 2180. NASDAQ Composite down 11 points. She's trading at 5209. Russell 2000 is flat, trading up 62 cents. Gold is off $2. Silver is flat, trading at 1981. Light sweet crude up $1.26. She's trading at 4306. Leading the charge here to the upside, you've got Vail Resorts up about $10. Sotheby's is up $5. Essex Properties up $3.60. To the downside, Allergan, that's off $7, about 3%. Ligand Pharmaceuticals off about nearly $6. That's almost 5% to the downside. The first question in the house, let's try to go answer this. The first question in the house from our man Z in the Tigers Den. Hope you had a nice weekend, Z. Hope everybody had a nice weekend. And let's make sure we have a great week. So what he would like to understand is there any high-confidence NDX ideas, the NDX 100? So let's go look at what it is that we know about the NDX 100. Let's first start with the monthly chart, right? Let's get the bigger picture, and then from there we'll try to figure out what the smaller-term picture might be. So hopefully, you're watching us on TigerTV, getting the live feed. Of course, you can't see my ugly mug. My camera on my system seems to have gone kaput. Maybe it was a lightning strike that hit on Saturday, or maybe it was yesterday. I don't recall. But it's not working. I didn't realize, so I just tried to log in for it. Doesn't matter. You're probably better off not seeing this ugly mug anyways. But you can see my screen. And that's the most important thing. And by watching us on Tiger TV, in HD, that is, you can see that we've got the monthly chart of the NDX 100 taking us all the way back into the 2000 timeframe, which made a high of 48.1635. There is nothing on a monthly chart to suggest that the NDX 100 is going to do anything other than at least hit that level, 48.1635. For goodness sakes, it may actually take that level out and close above that area. So the monthly chart says we don't have a test or rejection of 48.1635, so it ought to go up and test that level. It first got inside that swing point back here on the trading session of August. This is the monthly chart, August in 2014. Ever since it's been there, although it's been a long time because we're now at August 2016, it's taken 2 long years to get up to test that high. But the point is, on a monthly chart, once it closed inside there, it has been inside that swing point ever since. So if it's going to hang out here for 2 years, I'm going to go with the idea, this is the question, any high confidence NDX ideas, that the NDX 100 is going to go tag that level. Maybe take it out. Now, let's go take a look at some horizontal trading ranges on this. Let's take a look at the monthly charts. Now, the monthly chart, I'll go ahead and punch this up on the screen out here. Might be better if you can actually see this out here. The monthly charts, these dark, thick, red horizontal lines, for example, 45.83.18, that was a horizontal or primary trading range boundary line. Price is above that level. This would say that the spike, at a minimum, because you take a look at the midpoint, that's the little red dashed line on my screen, would say that the NDX 100 could easily move up to 50.82, 57. We don't see anything that says that it shouldn't move up to 50.82, 57 over time, right? We've been trading inside the swing point for a couple of years now. In the weekly chart out here, its midpoint line, this may be where we first see a real pause out here, is at about 48.39. I mean, I give you the exact number, but we're not going to really trade this as the exact number, are we? 48.39.28. We're at 47.76. I believe that gets us over the old swing point high. So look for that level to perhaps be a level of resistance. If I look at the daily chart says 48.83 is the number. So this would suggest to me you're looking at a range, big range, 48.39 is range number 1, 48.83 range number 2, and 50.82, 57. That's assuming that the weekly horizontal trading range of 48.83, the daily 48.83.84 gets taken out and doesn't act as resistance. But in this case here, this is what it suggests to me. Now let's come back and take a look at the daily chart out here, because here's what you and I know about the NDX 100. Actually, can I do it? No, I can't. I'll do it this way. I got to add a tool out here. I'll tell you what. Let's do it a different way because the tool's already out here. Let me come back to the. Let me come back to this time frame. Let me just change it to the daily chart. And here is another thing that we know on the trading session here of June 27th. What the NDX 100 did was it formed a Gartley buy pattern. For those of you that are efficient, well, it didn't actually form it that day. It formed it on June 28th. Now, of course, if you're going to attend my workshop on Wednesday, which you really should, it's going to be an extraordinary workshop where you're going to, well, I'm going to compress really the best of the best of the best of the best so that you can understand Japanese candlestick charting in one session. You're going to understand the benefits of it, exactly when and how and where to use it, what to be looking for, and an example is June 28th is, in fact, that session. Now, for those of you that are Gartley aficionados out here, and if you're not, you should be, or you might want to be out here, this formed a perfect one. Now, of course, you say, what's perfect? A perfect is just simply, of course, as HM said, he's just looking for an A to B equals CD pattern. I'm drawing that in on the screen out here, and you can see that what the NDX 100 did was it formed a 1 to 1.272 A to B equals CD. Remember, A to B equals CD patterns only make a 1-to-1 pattern 60% of the time. Wouldn't you like to understand when the market's doing those other 40% patterns out here, or when it is that you need to pull the trigger? If you would like that, then come on over to my workshop. Sign up on the page, homepage at TFNN.com, and you can gain access to that workshop on Wednesday evening, 5 to 6. So it's really late afternoon, early evening. Don't worry if you can't be there. It'll be archived on your members page for the next 30 days out here. So there's your A to B equals CD that form. You can see it was also a retracement, right? Let's go take a look at the retracement out here. The retracement from the low, that's back in February, all the way to the high that it put out here in April 19th. About a 0.618. We use that as a guideline, not as an exact number. So now we know that all not this. We know that it formed a Gartley buy pattern. What else? What do we know about the characteristics of a Gartley buy or sell pattern? Something to think about. But here's what I can promise you. When we get back from this break, I'm going to show you what outcome number 5 is of the Gartley buy pattern. Because maybe that is the idea of where the NDX 100 is headed to. This is Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Before that break, we really spent the entire session taking a look at the NDX 100. But, of course, what we did, what you need to do when you're evaluating any trade is always take a look, hey, what is going on in a longer-term picture? You don't want to just stay focused on just the time frame that you're trading. Get a feel for what's going on in the air above you as well as the ground below you. In this case here, we're taking a look at the NDX 100, and we identified that back here in the trading session of June 27th, it was really June 28th, when it confirmed a Gartley buy pattern. Then what you need to know is, hey, what are the outcomes? What does a Gartley buy pattern turn into? And what it turned, there's 5 different outcomes. Right now, we are in outcome number 5. Outcome number 5 says that Gartley buy pattern turned into a brand new A to B equals CD. That means you come all the way back to the February 8th swing point. That becomes our A point of the A to B equals CD. Our B point happens to be the high. This is what began the Gartley buy pattern. This is the April 19th high. Your C point out here looks like, let's see, is it the low of the 6th? That low was 42.82, or was it this one here? Was the low of the 6 out here, and then the what the heck? That was wrong. I don't even know what the heck I was thinking there. Your A point again back here on February 8th. Your B point out here on April 19th, and your C point obviously being the June 27th high. So the 1-to-1 A to B equals CD takes you to 48.65.34. That gets us over the 48.16 level. That is the high from 2000, March of 2000. So with regard to do I have any confidence? I always have confidence. But do I have any confidence in being able to say to you where it is that the NDX 100 is headed to? I would have to say right now 48.16 to 48.65. Of course, I gave you the bigger picture take, and it's not that those numbers are out of the equation. But here is what seems to be like the next stop. Now, you might say, is there anything that can get in the way? And the answer would be absolutely. It's what's called sellers. But how will we know if they show up and whether or not it has any meaning? That's an excellent question. That's where we take a look at Stevie's favorite pattern out here. It's my favorite pattern because I really wasn't looking for it originally. I was out looking to see if there was some type of celestial pattern that could give us an edge, something that really very few people were taking a look at. And after thousands of dollars and God knows how many hours, I came to the conclusion that no, there wasn't. There wasn't anything that was consistent when we took a look at tops out here. However, along that path, what I came up with is something that was present at all of the major tops in the market. And voila, everything happens for a reason. Sometimes you just got to go back to the well and say, okay, what's the reason? What's the reason? And voila, it will reveal itself to you. Now, here is what you and I know about the NDX 100. It's a beautiful thing. We can see that price right now is beginning to move higher and doing it with less relative energy. That is never a good thing. Not because it's out of energy, because that's when tops can form. So is it going to go ahead and make it up and touch that swing point level? I think that it will. I think it will. I think it will. Maybe it's going to go ahead and complete that 1 to 1A to B equals CD. But you and I have to recognize and realize that we use those levels as guidelines, not as affirmations of, not that it can't be used as an affirmation, but we don't use it as exactness out here. And we know that if you're trying for perfection out here, you're never going to find it. There is nothing such as perfection. Perfection is going to keep you from taking action out here, right? All we want is to be extraordinary. In fact, perfection is the lowest level that one can attain in life. Why? Because it doesn't exist. Maybe it exists in somebody's mind out here, but the reality is it doesn't exist. So we use this as guidelines, and so we know the patterns to be paying attention to. It says price is moving up towards an area where there could be a pullback, right? That A to B equals CD. Now we know that price is beginning to move higher, doing it with less relative energy. Is that alone a time to sell the market? And the answer is unequivocally, are you kidding me? I don't know that that's an answer. Are you kidding me? But that answer would be transposed into no, of course not. You have to learn to wait for the cavalry to arrive. And the cavalry will arrive, and it'll show you because it'll generate a bullish or bearish, in this case here, a bearish reversal signal. Why is this pattern important? Because I can tell you, there ain't no celestial pattern. There's no full moon. There's no perigee apogee. There's no Venus does this to Uranus or anything along those lines that is consistent all the time. The one pattern that is consistent all of the time is when prices move higher or lower with less relative energy and the cavalry arrives, because the market is here for one thing, to send signals, not smoke signals, real signals to both you and I out here. That's why we pay attention to the great work of H.M. Gartley, to those A to B equals CD patterns. This is why we take a look at and pay attention to price moving higher or lower with less relative energy or weakness. Back when the market formed a bottom back in February, it was doing the same thing. There were very few people on the planet. Everybody thought after the move down from January, you couldn't find anybody on the news media anywhere to tell you that the market was going to form a bottom. I do believe I was telling you that the market was going to form a bottom. Why was I telling you that? Not because I just pulled it out of thin air. No, not of course, because the market, because the chart signals we were looking for were communicating to you and I that that's what it was going to do. And of course, you and I know that the 84-year average says that the market always, doesn't always, but most of the time forms a bottom at the end of January, the early part of February. If you're going to go ahead and give a message to your children about how to save for retirement and when to put that money in, you're going to tell them, please, you're going to say, please, honey, do not wait till April 15th. You're missing out on a big chunk of the market. Put it in at the end of January. And you can tell them that Stevie said so. If you tell them that, if that's what they do every year, they will have larger, huger, even if that was a word, and it's not a word, but much larger gains than those who wait till April 15th. You're missing out on a significant bottom that typically forms. This is over the course of 84 years. Now, the last high that formed out here inside the NDX 100, and I won't belabor this point anymore, but it took place on April 19th, and that is when price moved higher. And as was doing it, it formed that wonderful dark cloud cover out there. Price gone, went ahead and made that A to B equals CD down. So where are we now? Price is moving higher, doing less relative energy. Is there any kind of bearish reversal signal? The answer there is no, it's not. Will one form? I don't know. We're going to find out, because guess what? Price can go ahead and move higher and get rid of that pattern. It can continue to climb, and if it's going to continue to climb, it's going to head to 48, 65, 34. Z, and everybody else out there, I hope that that helps you with regard to any ideas as to what the NDX 100 is doing and where it is headed to. So that is Stevie's take. So that takes care of really the general marketplace, I would say, because if where the NDX 100 is going, so goes the market. Now, let's just go take a look. You got kind of a flattish type market out here, but let's go see what's going on with the advanced decline oscillator readings out here, see where we're at inside the New York Stock Exchange. It's just right below zero. It's hanging below zero. It doesn't need that many net advancing issues in order to get out to full bullish mode. The NASDAQ Composite, that's the second panel you're looking at. That is bullish. You can see, how would you know just by looking at my chart if it's bullish or not? Just look at the panel number 2 where you've got like kind of a green and a red line out here, and green says, hey, that advanced decline oscillator is above zero. And you're above zero, who's in control of the market? It's like a football game. It's very simple. It is the buyers. It is the bulls that are in control of the game. Do we have a divergence here? Yeah, we do, because inside the NASDAQ Composite, it's saying all full systems go. Yet in the New York Stock Exchange and the Dow, it's saying not so fast. It doesn't take that many net advancing issues in either case for the other two to join along. But, hey, how'd you like that call on Friday when I pleaded with you? I begged you not to go short the market. I said that the market was going to finish at or near its session highs. How do you like that finish in the Dow and the S&P 500? How about a New York Stock Exchange? What a beautiful thing. Steve Rhodes with TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow is off 20. S&P is down 2. NASDAQ Composite is off 8 points. Now, if we take a look at what's going on intraday out here, and we look to the 30-minute charts, the weak link in the market, believe it or not, has been the NQ futures contract. At least I believe that it is. But we've got really two signals inside the NQ. Of course, newsletter subscribers knew this morning to expect and anticipate that we were going to see the market push lower. How did we know that? It's the exact same pattern that you and I just looked at on the NDX 100. It works on all time frames, works on all instruments out here. Price was moving higher. Let me get the crosshair going out here. Right up into this time frame, 5 o'clock this morning, right? Nice little move higher in the futures market up until 5 o'clock this morning. Then that so-called dark cloud cover went ahead and showed up at 5:30. By 6 a.m., we saw price follow through to the downside. We had a nice little market profile that said that this little box was in the hands of the sellers. Price goes ahead, makes a lower low, takes out at 9 o'clock this morning, takes out the bottom of that support level that should have held. Did not hold. Now that prices move lower out here, there's nothing that really indicates to me, pattern-wise, that price doesn't want to continue lower. Now, it may not do it much between 1:30 and 4 o'clock this afternoon. You know, it's up against a market profile that still is also more biased to the sell side out here. But if price gets about 47.80 or at 47.75 right now, anticipate 47.83 to be the next test. That also says 47.69 ought to be the next level of support. Now, we can see at 1:30, just as we finished this session, that there was a little hammer that formed out here. So what does that say? That says the cavalry has finally arrived. There's no real pattern that is completed out here, but it does say we want to pay attention to that low during the 1 to 1:30 time frame. That low, by the way, is 47.71.75 out there. Closing below that inside the NQ would suggest that there could be an A to B equals CD to the downside that is forming. So on the 30-minute charts, it always depends on what time frame it is that one is trading. There is more of a sell. You know, I use bearish, but I don't want to use the bearish as people thinking you're bearish out here. We use that terminology with regard to the direction of price. Anybody who might tell you we're like the worst bear market that they could ever imagine means that they don't have much of an imagination. We're up at highs. You can't possibly have begun a bear market. You're up at highs. There's no pattern. There's no pattern to pay attention to. If we take a look at the S&P futures contract here, we can also see that it was moving higher into the same time frame this morning at 5 o'clock. Got to wave number 7. Go ahead and wave at me, but I won't be able to see you because you can't see me. Of course, I couldn't see you anyways if you had a camera. But we can also see that price is moving higher, doing less relative energy out here. The same pattern that showed up in the NQ. And in this case here, we can see the prices move lower. Is there anything out here that gives us an indication that price is done moving lower? And the answer is no. But it's just a nice, mild, gradual pullback. Of course, we talked about volume and especially the lack and use of it during the summertime. But let's go take a look at what's going on in the summertime. Let's go take a look at the SPYs out here. And right now today you've got the SPYs, you know, mostly moving sideways to a little bit lower. Yeah, pushed higher. Look, the volume's not here. It's 22 million shares. It is 1:30 in the afternoon. We have been trading for 4 hours. Have we not? 9:30, 10:30, 11, 12, 4 hours. 22 million shares. Are you kidding me? That is light volume, folks. That is the definition. That is going to be one of the lighter volume days in the SPYs out here. But it is in August. People are vacationing. If you're listening, you might be listening while you're on your vacation. And if you are on vacation, I hope you have a nice vacation out here. So there's no volume in the markets to the upside, to the downside, to any side out here, the sunny side. If we take a look at let's go take a look at this. Let me switch over to some different chartaroonies out here. We don't some stuff that we don't usually do, but let's go ahead and do it. Just because we don't usually do it doesn't mean we shouldn't do it out here. And I don't know if I've got any requests. I don't see any other requests in the den. I will check and see if there's any requests by email, steve@tfnn.com. But assuming there's not, we're going to go take a look at the XLK. Let's go take a look at the XLK. No, I don't see anything out here. So inside of the XLK, let's go see where we're at. Now, we'll do it a couple different ways out here. The XLK trade at 2407 out here. You know, is this an A to B equals CD to the upside? Could be several of them, but looks like that is a possibility. Let's go take a look at it, but I'm assuming we're going to find out there's no volume here in the move. There was no volume in the SPYs. Why would there have been any volume inside of the XL? Oh, I've got the XLF. even better. So the financial sector, we'll take a look at the financial sector. As we can see, this broke above its most recent highs out here. So let's go take a look at it, see what kind of volume perspective there is out there. I thought I was pulling up the XLK, but no, lo and behold, it was the financial sector, the XLF. So let's go take a look at it. Give me a moment here to see what we did as prices moving above swing points out here. So the most recent swing point, that was on the trading day of July 14th, 54 million shares out there. And instead, what surpassed was 42 million shares. So now it took out a swing point with light volume. Even the swing point high, it did take out May 31st, which only had 33 million shares out there. So that is somewhat of a beautiful thing. That's actually the larger A to B equals CD to the upside. And for those of you that are bearish, you would not like to know what that ABC would take you to. Of course, it's a similar one that we looked at for the NDX 100 out here. And can I make the case? And of course, there is that nice island bottom that formed inside of the XLF back on February the 11th out here. Can you or I make the case that the XLF is going to run up to the price point of 25.72? And the answer is absolutely, positively. It just took out a B point, the B point being 33 million shares on May 31st. And in a market with no volume, it was taken out with 41 million shares. To me, that's crossing a B point with volume. So the XLF looks like the signal that it just gave to you and I is it wants to move to 25.72. Now, that would fit in with my theory, and it's more than just a theory, that the market wants to move higher through September. So that says it's got this week and next week and the week after to go ahead and complete that move. We're only at 24.06 as we speak right now, so that's inside the XLF. Let's go take a look at that XLK, the technology sector out here. Let's go see what it is doing or what it's done out here. And let's see, what the heck is this? Let me get rid of that. There we go. We've got some swing points out here, but let's get rid of those lines altogether because we're going to go check and see what happened as price was getting around those levels. So the swing from April the 4th out here at volume of 7.4 million shares, 7.6 million shares. Over it was 6. Oh, my goodness. Did you see that? Did you see that? Over it with volume, the A to B equals CD pattern. So let's go ahead and complete that. What does that look like? Again, the low here, January 20th. You could come back if you wanted to and use the February 8th. Why don't I do that just for giggles out here? But it looks like, where is it? It looks like right here, April the 4th, 7.6 million shares. That's your B point, and your C point all the way down here on June 27th. So 1-to-1. If you're going to ask me where is it that the technology sector is headed to, we would have to say it's headed to 47.73. That's the next stop. And if we take a look, oops, that's the healthcare sector. Let me just out of the curiosity, take a look at the XLK. Let's go see where we're at. We're only wave count number 5. So that would make sense that the XLK is on its way up to that A to B equals CD level, and maybe when it gets up there, it's moving higher with less relative energy, and maybe you get to wave number 7. You are only in wave number 5 as we speak right now. Yes, so the XLK is a confirmed. Did I say confirmed? I did. It's a confirmed A to B equals CD, the upside, because that April 4th swing point of 7.6 million shares, that was taken out with 16 and 10 and 15 million shares. So she was taken out with volume. Sacre bleu. What say you? We got the Dow up 25 points. S&P is down 2. Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 26, S&P down 2.5. How about those Olympics out there? You've been catching any of the Olympics? I thought last night was pretty cool. What an amazing and strong team the women's gymnastic team is. So hopefully they can continue on, performing at the same level that they had performed last night. That was amazing. Just simply amazing. How about Michael Phelps out there participating in that relay race? And, man, he was strong coming off that wall on the turn, was he not? I mean, that was just impressive, the speed that he was able to pick up. So pretty good out there. Way better than watching all the news and all that political stuff that is on in the marketplace. Huh? So you got to love maybe these next 2 weeks out here. Now, Ken in Wyoming. Hello, Ken in Wyoming. Glad to hear from you. He asked if I could take a look at Triple D, DDD, 3D systems out here. So let's go do this for Ken, see what's going on. The question is, does DDD look like it'll test its last high? So the last high out here, high volume high, by the way, is the trading session from April the 14th, that volume of 14 million shares out there. So let's try and go answer that question for Ken. So this is somewhat of a blankish type chart, meaning that all that I have out here is just volume, in some of the candles. But as Ken pointed out, and it's an excellent question, he's spotted this high volume high on April the 14th. So that's one thing that we know. What else do we know about volume bars and the candles that are out here? Well, one of the things that we know is that 3D system, Triple D out here, broke away with some volume, had that nice little gap, and that was up from the trading session of March 11th when it closed out at 11:55. Very next trading session, it opens at 13:33. The volume is 17 million shares. That's called wide price spread accelerated volume. Oftentimes, a stock will come back and test the breakout area. Well, in the case of 3D systems, it has been doing nothing but testing and testing and testing that area. All on light volume. For example, May 12th was 3.7 million shares. Remember, it's going against 17 million shares. Another test of that breakout area of significance took place out here on the trading day of June 27th, 4 million shares against 17. In fact, we most recently saw a test out here on August the 2nd, 4.5 million shares. So what we know is that price inside of 3D Systems has not been able to bust it down, right? It's tested breakout areas several times. There's many other days that you and I could select where it was testing that area. Now, let's go see if there's anything, Ken, that the TAS market profiles can generate for us as far as levels of support or resistance. And so with regard to support and resistance, we know that right now today, that price is trading above its daily TAS market profile, 1518. You'd like to see, I'm assuming you're in the trade. I don't know if you're in the trade or not. But if you were in the trade, you would like to see price close above 1518. That's the daily TAS market profile. You get above resistance, then that says that should be support. Does that have to be support? No. But should it be support? Yes. Is that a piece of information that we can use? Absolutely. Now, we also know that the weekly point of control, that's the place where both buyers and sellers from a intermediate term basis, weekly basis, are most comfortable with price. That is priced out at 1524. So closing above 1518 and 1524 will go a long way to getting up and testing that swing point high that you're referring to, which is, again, the trading session of April the 14th. What will change our mind on that? I would say what will change our mind is being able to bust out that breakout area. So that says somewhere a close below 1165. But as we speak right now, it does look like 3D Systems is going to head up and test that high. Let's just put this, remember, on a weekly basis. I mean, I can't start a show and say, hey, let's take a look at long-term charts, and then somebody asks a question, hey, where's this going, and not take a look at the weekly chart out here. That would be blasphemy. Even on a weekly basis, where we know we had that breakout that at about now on a weekly basis was 38 million shares. Price was coming back with what? Light volume, 16 million shares, and then last week, 29 million shares going against still 38. So light volume test. What else do we know? Well, here's a resistance zone on a weekly basis. I can see this is a nice little three-river evening star out here. Of course, that candle is named after Oda Nobunaga. We haven't seen Oda Nobunaga inside the Tiger's Den in forever out here, but that is the great Japanese warrior that has two candlesticks named after him, both the bullish and a bearish signal out here, and 1518 is the number. So this week, if in fact we can see 3D Systems close about 1518, it would suggest it's going to go test that high. Now, here's the other thing that we have to contend with, Ken. When we take a look at the weekly chart, we now know that price is right now testing the weekly version of that high that you were referring to, because it's now trading inside the April 11th swing point from a weekly perspective. 32 million shares out there. Today only 3.7, but we're only one day in. We're only 4 hours in, so I don't know what the volume is going to be like. But closing inside from a weekly perspective, the price point of 1571, certainly doing with volume of 32 million shares, I would say you're going to go test that high. Light volume, you close inside it. I'm not sure if it is or it isn't, but closing inside still gives you that opportunity to go up and test it. So watch for what you don't want to see now. Now that we've done this, now that we've looked at the weekly chart, what you don't want to see is you don't want to see 3D Systems close below 1571. That's your first thing, on less than 32 million shares. But really, it's closing below and rejecting those TAS profiles. So closing below that 1518 area, that would say this is just simply going to consolidate, and we'll go back and test out those lows out there. So that is for Ken in the wonderful state of Wyoming. That's Stevie's take on 3D Systems. So if you've got anything else you'd like to take a look at, this doesn't just apply to Ken, it applies to everyone out there. 877-927-6648, of course, inside the Tiger's Den and Instant Message, or Steve at TFNN.com. I'll do my best to get to each of you. Let's go take a look at some individual stocks out here. Let's look at what is it that's moving to the downside. Allergan, AGN, is the ticker symbol. What's their deal? So it looks like they were out with numbers out here. And as we take a look at the numbers, this is pulled back. Volume today about 4.8 million shares so far. Let's go figure out what this is doing. So all that this did, I'll turn off the profiles first. That way, you know, we have a clean screen, and kind of not a green screen, but a clean screen out here. It makes it a little bit easier to see, you know, those gaps and volume and what things we're doing. And you can see here's your resistance zone, right? Price had gapped down in essence on the trading session of April 5th. April 5th was 36 million shares to the downside. Now, we could draw it right here, but we can just also say, hey, there was a session that was a little bit lower on April the 1st, April Fool's Day. That's the area that has acted as resistance. What kind of resistance? Well, the kind of resistance where people were just glad to get their money back at $268 a share, because when it was sitting there at $195, they were thinking this was not a very good investment. That is inside of Allergan. Now, the volume here on the trading session of July 27th was 7.5 million shares, which took out a swing point with volume. In essence, it was a confirmed A to B equals CD to the upside. But if you weren't paying attention to the left side of the chart, then you would not have understood, well, why did it stop where it did? See, this has a confirmed A to B equals CD that says price should take it to 272, 271.75 to be exact. But we know by looking at the left-hand side of the chart, there is one heck of a supply line of people just wanting their money back. So what does that mean? This says in the case of Allergan, this thing could chop around here. Right now today, it pulled back to the daily TAS market profile, 241.71. It's held thus far as support. If it can continue to hold that, it'll just move sideways to higher. If it moves below 241.71, you can see a price move to 230.34, maybe even 204.21. But right now, things look okay in Allergan territory. I don't even know what that means. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Let's take a look around the world out here. What do we see? We see in the DAX out here, we've got the 5 core charts that we look at to get a feel for what's going on across the globe. The DAX here looks like a little doji candle, but really wasn't. There was a gap up today as well, closing above the its oscillator on change line, which is priced at 10,287.41. Is that bullish or bearish? One thing, it's bullish. You got to close below that before the price can really start moving lower to the downside. The FTSE is back above its oscillator on change line. It's not that much further below where it closed, but nonetheless, today was nothing more than a test of support. What does that mean? That means it's bullish. Take a look at the Nikkei. Nikkei up above its red line out there. This is the kind of red line you want to pay attention to, the Nikkei. This is in bullish mode. The Hang Seng, it's in bullish mode. The Shanghai has a little bit of work to do. If it can close higher tonight, because it closed basically right on, it's the only indice of the 5 that we're looking at that says maybe a bit of caution should prevail out here. But across the world, things look pretty good. Here in the U.S., things look pretty good. We're just still working off some of Friday's action, and it was action. For sure, inside of the market. One of the questions that came in is Steve says, this is from L. I don't know what L stands for, but it doesn't really matter. And when I open my show, I say, don't be a prisoner of your past, be a pioneer of your future. What do you mean by that? It has a lot of different meanings, but let's take a look at it like this. Sometimes people think it's a negative meaning. It's not a negative meaning. Let's look at a couple different things. And I know this from playing golf. You just know this from life, right? Take a look at the Olympics and the athletes. Hey, did you see that bicycle race yesterday, or at least the close of that bicycle race between the bicycle race? You know, that was a marathon. How many miles did those girls ride? Of course, the guys did it the day before. But did you see that you had the woman, the U.S., American, what was her name? I forget her name, but she was in the lead like the last 15 miles or so, going down some treacherous terrain, if I'm not mistaken, right? The girl in front of her wiped out, and she lost this in like the last 100 yards or 200 yards. Maybe it was 2 football fields out there, but lost it. Just didn't have the legs out there, you know, thinking, you know, and I heard an interview, just an excerpt from an interview, and she was thinking to her mind she had it done. You know, she had the game won before it was over out there. You can't do that. Look, here's the deal. Michael Phelps, all of these athletes, even the U.S. girls, the Olympic, the gymnasts that were out there, you cannot be a prisoner of your past. That means that what you did yesterday doesn't, you know, what your past does not equal your future. Unless you want it to. Now, you can take those positive affirmations out there to convince yourself, and you want to do this, that you can actually make something happen. But, you know, what you don't want to do is be a prisoner of your past. You want to stay in the present. We talk about that all the time. Trading and investing, candlestick charting and patterns out here is about trading, is about being in the present. The most important thing you can do is be present with regard to what the market is communicating to you. If you, the idea of being a pioneer of your future is this. I promise you one thing. You take a look at people who are depressed, people where life isn't going the way they want. You can't interview these people right now, but you can take a look at things beforehand. Take a look at anybody who's ever committed suicide. I promise you they were a prisoner of their past. They did not have a compelling future. To be a pioneer of your future, make sure you have a compelling future out there. There's all kinds of stories about great Olympic athletes out there that had a compelling future, were able to jump out of a boat and you know, swim their family to shore and things of that sort. So there are secrets out there. They're in front of us all the time. So, folks, do not be a prisoner of your past, good, bad, or indifferent. Just always be a pioneer of your future and make sure it is very compelling. I'll give you a compelling future. It's our polar bear, David White. He's going to be up next, so stay tuned. You've got David White from 2 to 3, Tom O'Brien from 3 to 5. Have a magnificent and marvelous Monday. Get over to the homepage of TFNN.com and sign up for my workshop. I'll give you a compelling future for trading these markets. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.